Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we're going to be digging into some recent comments by Elon Musk, who obviously has some buying power and also quite influential and well known. And interesting how he's come to a similar analysis that many of us in the gold and silver space have been thinking about for a long time, where he talks and is publicly warning on a somewhat regular basis now about whether USA is going bankrupt. So to dig into that, as well as a lot of other things happening in the gold and silver world, I'm joined by my dear friend Andy Schectman of Miles Franklin. And Andy, it's great to have you here as always. How are you doing today?
Good to see you too, brother. Thanks for having me, Chris.
Well, it's good to have you here. And yeah, let's dig right into some of the recent comments from Elon because there he mentions just another FYI that government spending is driving America bankrupt. You can see interest payments on the debt now exceed national defense spending. And he's had several similar comments. Here he is retweeting Wall Street Silver. This one was July 30th, so that's today. The one about the debt, that was yesterday. And of course, here we had dollar value destruction. And you see that thing that sure looks like an ounce of silver in the number one
Yes.
slot. And we see this one coming from last week. So July 22nd, obviously, for people who have been following some of these dynamics, that particular news that dollars being devalued and debt is rising, not necessarily new. But Andy, any thoughts on perhaps implications of the fact that Elon Musk, who obviously has a wide audience, now noticing it too?
Yeah, he's been following Wall Street Silver for a while, and which I found very interesting. Of course, Wall Street Silver had its own issues, and I'm surprised that he's still commenting on it, to be honest with you. But I'm glad that he is. He's in tune, and he's right. Look, if you just go back to January 2020, Chris, the debt was $23.3 trillion on January 1st, 2020. And here we are now at 35 trillion. We've gone up $12 trillion in just 4 years. That is a speed that is certainly non-sustainable. And at $100,000 per second increase of debt, one, two, three, four. I mean, just keep on going. You'll get to a trillion in 100 days at that rate. And the speed by which this is increasing is really quite concerning. And I think I admire Elon. Quite frankly, I don't know why more people are not saying this. He is addressing what is really the most important thing to address. It's not all of the nonsense that we keep hearing in political circles. This is one of the things that could greatly undermine this country. You reach a point where the rest of the world says, well, what the hell do we want anything to do with the currency that is being destroyed by $100,000 of debt accumulation every second, 24/7, 365? That is unsustainable, and I give him a lot of props. And quite frankly, I wouldn't be surprised if under the table he was accumulating silver too, because he understands that by watching Wall Street Silver and corollary, I'm sure he's listened to you and others in this space. If he's watching Wall Street Silver, the analytics, would or the what are they called? The whatever it is, the what's the word that where that pops up based upon what you've watched before. He's going to be seeing other people talking about silver and the disparity and the draining of the supply. And I wouldn't be surprised if he understands debt the way he does. He's following Wall Street Silver, that he understands very well the accumulation of silver for Tesla and for his SpaceX and for all of these needs is something that he can't be without. So yeah, I put a lot of credibility in what he has to say. He's a smart man, not just in terms of what he produces, but in terms of the way he thinks.
Yeah, and perhaps it also could be reading the Wall Street Journal. I mean, it's interesting how we've seen stories like this appear more often, especially this year. But here, Wall Street Journal, this was June 25th. National debt crisis is coming. And then we have Will Debt Sink the American Empire? This is June 21st. So back in June, active week you had there for news out of the Wall Street Journal. It, on one hand, isn't surprising, but it, while we've always known it's kind of a long curve, when does this become an issue? It certainly seems like there are some forces that are pressuring things now where you're kind of reaching certain points that you can't just keep doing this. As we'll touch on, we've heard even JD Vance talking about a dollar devaluation. We've heard for months whispers from the Trump team, which now increasingly seems likely to be elected, talking about a dollar devaluation, which in fact, let me see if I can find that one and pull that up now because I mean, certainly we have the side that's likely to win talking about devaluing the dollar, so we can see perhaps something coming soon.
There's no question. I mean, you go back to 2020 again, interest on the debt was 345 billion a year. It's now over a trillion. The speed by which this is accelerating, it's kind of the hockey stick, the parabolic point. And again, you have a government that has massive irresponsibility in terms of its fiscal policy that continues to spend as if it doesn't matter. And at what point does it matter? You know, and yet you find so much changing in terms of who wants to hold our debt. We're now supposed to believe that the United Kingdom, Ireland, and the Cayman Islands have the most insatiable appetite for our debt, where the rest of the world, who has traditionally been the creditors to our massive spending binge, have moved a different direction. So yeah, this is something that is getting to the point where it must be addressed, it must be noticed, it must be talked about. It's moving too fast, and it will bankrupt this country if ignored. And you know, it's not one of these things that will just go away. And I don't know how much longer you can kick the can at the speed in which it's growing. I remember in 2008 or 2009, right after the GFC, when I was debating cashing out my IRA because there was a bill that made it down to the House floor talking about taking IRAs if we ever saw another massive crisis. And they equated it at the time to a $17 trillion debt and $17 trillion in US IRA money. Well, I mean, since 2009, we've gone from 17 trillion, we've doubled, over doubled. And the speed at which it is now accelerating is something that must be addressed. So I hope we see more institutions, more politicians, more commentators, more news agencies recognize that this is something that must be addressed before it gets way too far out of hand. And you could argue that it already is.
Yeah, certainly that is the case. And why don't we take a quick look at the current gold and silver pricing, where again, you see now we have moved to the December contract. So we're seeing 24.49 in the futures, and on silver, we have 28.36 today. So up 50 cents and a nice rally. And of course, we have the Fed coming up tomorrow, meeting starting today, but the announcement tomorrow. And Andy, any thoughts on we've seen 2 weeks where we've had towards the end of the week in particular declines in gold and silver. Was interesting the COT report that came out last Friday, which had the previous sell-off included. You did see some short covering by the swap dealers. I imagine it's likely we'll see a continuation of that on this Friday's report, which will capture last Thursday and Friday's decline. Unfortunately, they do it on a Wednesday to Tuesday cycle, which hopefully that made sense. But I think that's something that was out there as the prices increased. We saw that short position getting larger. Yes, is there always the possibility that the banks get overrun? Certainly that could happen. I think that's what you had in 2011. But there was also the risk that the prices would come in and you would see this. And curious if you have any thoughts on that one.
Yeah, I mean, just in this report, you see almost $5 billion in long futures sold by the managed money, and almost $2 billion in long futures in silver sold by the managed money. Once again, you got to just wonder, when are the managed money going to wise up and stop getting fleeced the way that they continually do, the rinse, wash, and repeat, where the commercial banks allow the price to rise, they suck in all the speculation, they absorb all the buying that the managed money does, and then they start to step on the price and overwhelm the managed money, who doesn't have the appetite or the desire to see losses on their balance sheet, and they capitulate. One of these days, and you know, when you see the massive accumulation and the draining of the exchanges, when you see the realization that the Fed's going to lower interest rates, and maybe that's why the price of gold and silver are up today. The people who follow this closely, who are inside, they know rates are probably going to be dropped, and I doubt they'll be dropped tomorrow, but maybe they will, for sure into September, of course. But anyways, the point of it is that you know, I think that one of these days the commercial banks have to understand that this is a dangerous game to play naked short in an environment where the world is accumulating metals, accumulating commodities. It's a very dangerous game. It used to be a whole hell of a lot easier when no one stood for delivery. But that's changing now. We see delivery options that are making going naked short very dangerous. So one of these days, maybe the rinse, wash, and repeat will stop after the wash, and it will be the managed money who were hoodwinked and fleeced into going short, kind of like we see right now as they're moving in that direction. It'll be more illuminating to see the this week's COT report to see just how much they have given up and given back. But one of these days, the commercial banks will not short the rising market and they will go long. And we've been waiting for that day for a long time. But one would think as we get into, as Zoltan Pozar puts it, deeper into Bretton Woods 3, a system all about commodities, moving away from opaque debt instruments that are in effect issued by an insolvent and borderline hypocritical government, and move to tangibles. And I think that's where we're heading. So maybe one of these days we all get fooled. You know, the last page of the little boy who cried wolf, the wolf comes. And one of these days the wolf will come to this market and will be a religious experience for those trapped on the naked short side. And I have a feeling it will be the managed money, not the commercial banks. They're too intertwined in what's happening, and they're doing these things in many cases, as we've learned in retrospect, at the behest of central banks and of sovereign government. So yeah, I think one of these days, hopefully sooner than later, the price is allowed to rise by the commercial banks and not the same cycle that we see of rinse, wash, and repeat and fleecing the managed money. So maybe the managed money gets wiped out one of these times as the price just starts to run away from them. So that would be what my ultimate vision would be. But I think we're getting closer than we've ever been to that moment simply because of all of the deliveries that are being made, which used to represent less than 1%. I don't know what percent it is now, but it's a whole hell of a lot more than one.
Well, which certainly makes an interesting time period that we're currently in. Vince Lancy, who does our morning show, he shared a Goldman report last week where they were talking about the gold market in particular. Obviously, we've had this rally that has happened more based on what's going on in the East and very little Western participation so far. And Goldman, as I was reading through the report, they had this one line, which I think on one hand is simple and obvious, yet on the other hand is worth thinking about a little more, because they said, what if the Western investor comes in when the Fed starts cutting rates, which, and we can say how the East approaches it or how from a gold or silver perspective, you or I would approach it, yet to the degree that largely the West based on what the Fed is doing. So whether we agree or like it or not, that you do have really the primary signal that would conceivably induce some Western participation into the rally. We have seen some recent inflows into the ETFs, so some signs of interest. And I'd like to get your thoughts in a moment about what you're seeing on the retail level, because I've heard reports continuing, especially at the elevated price, that you have had a lot of retail selling, but we'll come back to that. Here you see the Fed pricing. So basically 100% priced in for the cut in September. And you see almost a cut at every meeting being priced in roughly going forward. For what it's worth, the new Fed whisperer who took over the John Hilsenrath role, Nick Timiraos, who it's kind of like, what is the Fed going to do? Wait for his column to come out. So he's talking about how the Fed rate cut finally in view here from Goldman. Interesting comment from Jan Hatzius, who says, why wait? While September remains our baseline, we see a solid rationale for already cutting in July. So
Yeah,
the
maybe that's
idea
why
that,
metals are rallying now, and that's yeah, maybe. I mean, and I think that it coincides with a. We talked about this at lunch yesterday. You and I, coincides, in my opinion, with an uninverting of the yield curve. What that to me, and it's not being done in a way that is bullish for the economy or the market, where the long rates are starting to move higher based upon the confidence of this economy. It's the opposite. It's the banks don't want to lend any money, and so they're jumping into get as many of the short-term treasuries paying a 5% coupon as they possibly can, which is pushing the yield down. They're doing it because I think they would rather lend rather not lend money to you and I to build a business or to speculate or whatever it is that we're doing with that money. Instead, they'd rather give it to the Fed with guarantee, or to the Treasury rather, with guarantee return with little risk. So that's an indictment of the system, and this uninverting of the yield curve since 1950, every single time has preceded a recession, which would only lead to more rate cuts. And maybe that's why that gentleman is saying that the economy is slowing down. That you take a look at the Magnificent Seven, which have been holding up the entire industry, and those are getting hammered right now. You look at the Russell 2000, which is a broad scope of the economy. Most of those are down. And the funny thing is, if you look at the Nasdaq right now, Chris, there are more financial stocks and there are more um, financial and industrial stocks, what I'm trying to say, inside the NASDAQ than there are tech stocks. If you would have bought a sampling of 30 NASDAQ stocks in 2022, you'd be down. It's those 7 stocks that have been holding everything up. This horrible breadth is a bad omen. And so, yeah, I think that this is a situation where as the economy starts to slow, as if the reinversion or the uninversion of the yield curve again predicts a recession, as it has every single time since 1950, then yeah, the economy is going to slow down. The Fed is going to be incentivized to lower rates, which again would lead to, obviously, I think, reigniting a gold bull market that might just wake up the public. And these these things that they're trying to do, let's just say that they can reignite the bull within the stock market by doing this. Maybe they will. But I think as the stock market goes higher, even if it goes parabolically higher, measured in ounces of gold and silver, it will be losing ground. And I think that's the issue here. What we're talking about is further debasement of the dollar and further destruction of the value of the dollar, the way that all governments have done since the beginning of time, choosing inflation over austerity, not paying the price for the mismanagement of monetary policy and the irresponsibility of fiscal policy, instead just doing more of the same. And in the end, it will only be very bullish in terms of price for those who have accumulated gold or silver, regardless of what the rest of the world is doing. And as you mentioned prior to this, you have gold now back up near all-time highs on that December futures contract. And that comes with a positive real yield, a strong dollar, and outflows out of the ETFs. It's not supposed to be that way, right? It's supposed to be the opposite of that. So that tells me the underlying market itself is very robust. It's very strong. It's being held up by people across the globe and central banks and sovereign wealth funds who see what's happening. And the very sophisticated people in this country have no idea what's coming because they may be well read, they read the wrong stuff. And that's why that article says, well, what happens if the public wakes up? Sure, it would be huge. We added 14,000 clients in 45 days when Silicon Valley Bank was bailed out. And that's illegal. They're supposed to be bailed in. What happens if we see a bank bail in, according to the Dodd-Frank Act? And that, the whole inquiry with the House inquiry, the Oklahoma senator who questioned Janet Yellen and why did you do this? I mean, you've covered that ad nauseum. But the point of it is that yeah, when the American public wakes up, if we've seen this kind of strength with zero Western participation, and to your point, there has been a lot of selling, more so than I'm accustomed to seeing in 34 years of business. It's waned a bit. It was much more, I'd say, from the beginning of this year, the first quarter, but it's kind of tapered off, and there's more understanding that we're getting into a very scary time with the election coming, the BRICS meeting coming, attempted assassination, all of this craziness that's everywhere. So even my dog thinks it's crazy. It's crazy everywhere. And I think that's kind of resonated with people who are paying attention. But to that author's point and to yours, yeah, the public in large is nowhere to be found in this industry. And if indeed we saw something that collectively wakes up the psyche of the American public, sure, it's rocket fuel on top of a market that's showing great strength with complete and total absence of Western participation. It's a very valid point.
Yeah, and Andy, in the context of all of that, has there been any change in the premiums? I know they had been low for, I guess it was better part of a year, year and a half. And you mentioned the last time we talked, finally ticking up a little bit. Has anything changed there?
Not really. No, I mean, even the Silver Eagles have come back a little bit from where they've been. This is a market that has been largely ignored by the investing public. Don't get me wrong. I mean, business is still pretty strong, much stronger than it would have been prior to 2020, but it's nowhere near as strong as it should be based upon the things that I see coming. And again, you've had a run in the equity market, in particular, in a handful of stocks that most people who were invested, I'm sure, had a piece of. Most people who were deep in the stock market probably had a piece of Nvidia and of Apple. These are the stocks that have been moving so much. Maybe some have been buying Bitcoin. The returns have been fantastic. But I think it's eerie how people have ignored gold at all-time highs. I can't ever remember seeing a market like this at all-time highs that has garnered such little fanfare. And maybe ultimately that's bullish. Yet you look around the world and the demand is off the charts. It's just here in the United States, whether it be through through rhetoric or lack thereof, or lack of media attention, or the wrong media attention, or just the overperformance, the unrealistic type of instant gratification not being fast enough we've seen in some of these tech stocks that have just made the mainstream public completely blind to gold continuing to march forward methodically and outpacing every traditional asset since 2020, or excuse me, since 2000, with a 9.9% annual return. It's a market that has shown amazing strength, but it's the tortoise, not the hare. Now, silver, on the other hand, that's certainly a very frustrating market, but it's still much higher than it was a year ago. And yeah, it should be a lot higher. It should be above 30. But when you see 8 banks still holding the largest concentrated short position in any commodity traded on COMEX by a large degree, massively large degree, that tells you, the bigger question is, why the hell would 8 banks short what is a commodity that is being accumulated around the globe? One of the things that I found really amazing was the interview you and Vince did. And you and I talked about this yesterday, where China is buying unrefined silver concentrate from the Latin America miners and refiners, and something that is very infrequently done, and paying more than $200 a ton, more than the people in the West will. And they're gobbling it up, refining it back home. And one of the things that I found most interesting is your point that this would not affect the silver spot price because it wasn't refined and or wasn't going through the normal channels that this would affect. It tells me that these very wealthy countries in the East and in the global South understand what's coming, and they're doing all they can to position themselves, even buying Doré bars from Latin American countries, willing to pay way more than anyone else will, just so that they can get a piece of this. But it's very interesting that it doesn't have an impact yet on the price. So this is all about positioning, and it's sad that the American public doesn't see what's coming, but a good portion of the world does.
Yeah, and if I can just add a detail onto that, the miners normally pay, this is what we're told directly from the mining company. They normally pay $200 per ton for the treatment to their concentrate. And as that spread was elevated, the refiners were lowering that rate, believe down to as low as $10 per ton from a normal rate of 200 per ton. I believe it even went negative at one point. So basically they're paying to get that concentrate, and certainly emblematic of the demand we've seen. Now, one thing that has happened, we have seen the spread on gold between London and Shanghai. That actually came back in, was negative at one point last week. So obviously we've talked a bit about how those were elevated, the premiums on both gold and silver. So just on the gold side anyway, that has come in. And Andy, another story that came out that I just started going through this morning, but something that we talked about recently, where the public numbers from China indicated no additional gold purchases, although Jan Nieuwenhuis, who does some great research and
He's
actually
amazing.
got to meet him back in 2013. So
He's one of the best commentators out there. He has my tremendous respect.
Yeah, and we hear him mention here that the custom data reveals that the Public Bank of China, the People's Bank of China, did continue to buy gold in May, even though it had communicated to the market that it had discontinued buying, and they were buying at a rate of 53 tons. So you can find that on Gainesville Coins.
We've been saying that. We said that all along. I mean, when their
You
commercial
did you did
banks,
say that clearly when that happened.
yes, and when their commercial banks buy on behalf of the PBOC, they're not declaring it to the IMF. When they buy from the refineries in South Africa and in Switzerland, they're not declaring that. When they buy gold that's under 995 pure, they're not declaring it. And why would they? Any more so than why would we? And we haven't. No one knows how much gold's at Fort Knox. Ron Paul's tried to audit it twice. Why won't we tell anyone? And if you are China and you are thinking that gold will be part of a new system, we've talked of the amazing video that you had from what's his name, Matt. What's his name? Can't hear you, Matt Riley.
Riley.
Yeah, and I had the good fortune of talking to him. You put me in contact with him. It was an amazing interview. I watched it 4 times, took notes, and I believe very, very, very much that he's right, that the new BRICS settlement currency will be the unit. It was announced by Dilma Rousseff. She's the former president of Brazil. She's the head of the BRICS New Development Bank. That in principle they've agreed to it, which will be 40% gold. The gold is money, and they understand that will be part of a system. There's no reason they would want to tell anyone. You know, Bill Holter and I were talking not too long ago. He's like, look, they've been mining between 400 and 500 tons since 2000. Why that alone would put it way above the numbers that they say that they have. So, yeah, and by making the premium negative, it just goes along. You know, they're hoping that it goes to show that there isn't any demand and people will sell it to them at a discounted price. Sure, they're not dumb. They understand that rhetoric is misdirection, and that's what they're using to accumulate more. For people to think that they're genuine with their numbers is a joke. My whole career, everyone said China is lying about their numbers, lying about because they stayed at like 1,200 metric tons forever, and they never updated it year over year over year. And then we get 18 months in a row of them updating their numbers, and then they stop for 2 months, and we think they're now honest. They're not, and nor are we, and nor should any central bank. If indeed it will be part of a new system, it would be much easier to say, oh, look, we have more than we were telling the world, come audit it, than it would be to say, yeah, we're buying everything we can because the world is so connected. And just like that, everyone would scoop in and crowd them out of their trade. So it's do the opposite type of deal as far as I'm concerned. And I think, Jan, that article, I haven't read it. I look forward to it. I read almost everything he puts out. I think he's one of the best commentators in the space. And thanks for bringing that to my attention.
Alrighty. And speaking of things that are happening in the East, I have a few other ones to pull up here because we've talked about this a lot, and I think for good reason. The sanctions escalating, which certainly seems to be exacerbating certain global dynamics. And I made a short video on this one last week because it didn't seem to get a lot of attention. I thought it was pretty important. But in terms of that ongoing saga that the Russian reserves were frozen back in 2022, coincidentally, at the same time that the central bank gold buying at record pace started to begin, then we've had Russia respond with their own sanctions, as the US has talked about actually confiscating the money. And the news at last week, US banks to begin reporting Russian assets for eventual forfeiture under new law. And you see here, Treasury Department ordered the nation's banking industry to start to closing its holdings of Russian assets with the goal of eventually seizing those billions of dollars in assets and selling them to aid the devastated Ukrainian economy.
It's as
So,
dumb as a mud wall, brother, in a rainstorm. And at the same time, you got the stupid G7 leaders who agreed to lend the Ukraine $50 billion using the frozen Russian assets held in the European Union. And that's why you got Saudi Arabia, who just came out and said, if they do that, we're going to start dumping treasuries, European treasuries, starting with the French treasuries. It's a line you don't come back from. It's just stupid.
yes, and as you mentioned here, we do see the report. Saudi Arabia warned G7 nations not to seize Russian assets.
He looks
So
pissed off.
I would imagine so. What's interesting down here that mentions that I guess 6 billion is held by Russian banks or by U.S. banks and the majority of it is in European banks, but they do hold hard currency as well as gold and investments in publicly and privately held companies. But I'm not saying that this is an attempt just to get their gold, although interesting how gold seems to pop up in a lot of these things. And of course, there's a lot happening. I mean, there's the election, gold, silver, yet in the background, we see signs that don't suggest that things are going well with US and Russia right now, because there was that attack. This was about a month ago, and we'll leave aside whether accurate propaganda or not, but Russia blames US for barbaric Ukrainian attack on Crimea, summons ambassador. So things not getting cooled off. There was that one. And then here, this is interesting. Europe turns to conscription as a threat of a wider war grows with Russia. That is one thing in terms of Trump that I found interesting. I know he had that comment where he said that if he's president, he will end the war in one day. Certainly, that's something that I've been thinking about a lot, because on top of everything else you've talked about, you have this whole situation, which maybe you don't want to focus on it every second of every day, yet is still lurking in the background.
Right. Well, let's hope that we don't see that. That's definitely I would hope we don't see that, but it wouldn't surprise me one bit at all. You take a look at the current state of our military, it's now at its smallest size since 1940. And I think that's bad. And you got 77% of young people in America don't even meet the basic standards to join the military, whether it be physical, mental, or for moral reasons. So yeah, scary times, brother. And that's it. Everything seems to be spinning out of control these days, more and more and more. Used to be that we would see one newsworthy item a week or a month, and now it seems there's 20 a day. I mean, pick your poison. But I think the one thing that I think that whenever I see these stories, to me, it's all part of one thing, and it's individual stories that in and of themselves lack the context, but when put together, create a problem, a big problem, and only makes it that much more difficult. You don't know which hole to put a finger in as leaks are springing everywhere. So yeah, that's a scary thing.
Yeah, certainly not ideal. And a few last things wanted to run by you before we wrap up here. I did find here is the comment of JD Vance, which, Andy, you've talked a lot about Jared Bernstein, and it seems like whether you have Republican or Democrat, it
Devaluing, of
similar
course, is a
commentary.
scary word, but what it really means is American exports become cheaper. Again, the idea here is that devaluing the dollar is potentially a good idea.
So I personally
And
think
you know what
that's
he also said? Yeah, and just like Jared Bernstein, he also said that arguably the world reserve currency is not a good thing. And that's what they will do. And to me, what Trump and Vance would do, Chris, I mean, we're as far as the currency is concerned, we're in trouble. Period. I don't see a way around that. But what they might do, which I think is more important than anything right now, is to get our house in order. To bring back law and order, to stop the open border and 20 million people in here illegally, to bring back the things that this country stood for, the nuclear family, the integrity surrounding the elections and the Justice Department and the immigration. All of that stuff to me is almost more important than all of the squandering of our world reserve status. Because I think when countries around the world and people around the world are looking at the United States, even if we've screwed the pooch in terms of the way that we've handled the world reserve currency and our affairs geopolitically, at least we would be the bastion of sanity and of justice and of liberty and of freedom. And we do things the right way with letting people into this country and have them assimilate and do it the right way. And all of the things that have made this country special arguably have gone wayward. To me, that would be my hope more than anything financially, because one could argue we're too far down the rabbit hole where either administration, and if we, if they come in and do something like that, where you have a situation where they're trying to devalue the dollar It's just more of the same, and impose more sanctions, more of the same. The one thing that I do take solace in, if he were to be elected, is there's a high probability that Judy Shelton would be part of his cabinet, maybe even the head of the Federal Reserve, and she is a gold advocate. So maybe there is some fiscal sanity abound, but for me, the real hope would be to get our country back here, so you don't feel unsafe, going to a ball game in a big city and walking back to your car, first stopping at a bar at 11 o'clock at night. Those days seem to be behind us right now, and so that to me is what I would hope for in terms of currency. I think we're in trouble. It doesn't matter which administration takes over. The currency, the prospect of retaining world reserve, those things arguably, I'll put it to you this way. I think the hegemony has been lost. I don't think we get it back. The supremacy is still here. We still have the majority of reserves held around the world, and majority of transactions are done in dollars and all of that stuff. Hegemony is gone, and I don't know that we ever get it back. I don't know that either administration has any aspirations of it. But to me, getting law and order and sanity back in this country would be primary goal number one. And I think they could do that.
Well, we certainly hope so. Although, in terms of a few last notes from the eastern half of the globe before we wrap up for today, just wanted to show this one. I thought it was pretty cool. And they mentioned while the US and EU have spent their resources on continuous war for the past 30 years, China has developed in a great hurry. Here's a fully automated EV factory, and certainly, certainly pretty impressive to see what they have going on there. And hopefully, one thing that will come out of the current situation is that we'll see some of the manufacturing come back to the US and be able to compete, and see how the currencies factor into all of that. And then the last note I had here before, perhaps you can let us know if you did have a special this week, but big news last week was that India cut the taxes on gold and silver imports. And the part that I highlighted here is that this is right in front of the onset of the festival season. So obviously India, long tradition as a gold and silver buyer, did have those tax cuts, and in front of the part of the year where they often have a lot of purchasing. India has boosted their gold reserves. This was from June. They mentioned 37 tons. I believe that's up to 45 tons now. And you can see here is the chart of India's gold reserves, which has increased a good bit since, let's call it 2018. And Andy, I guess before we wrap up, anything that is on special for people who are looking to buy or sell gold and silver at this time? I know you help facilitate the transactions, and certainly sometimes I think there's been a lot of people that have been sitting on silver for a while, and now that it was up at $30, above $30 for a little while, I think a lot of that has come in. I've wondered, is there some point where the people who want to sell at $30 have already done so? But maybe you have a comment on that. And is there anything on special that you could let folks know about?
Yeah, the special right now are junk silver bags, $2.50 an ounce over spot. It's the best value in silver right now. Bill Holter says it's the best form of silver to own, period, because of its utility, and he recommends it to his clients more than just about anything else. And I agree with him to a degree. It's not only is it less expensive right now than all the sovereign mint coins. During the pandemic, for most of the last 3+ years, it was the second most expensive thing that we sold next to silver eagles, higher than all of the sovereign mint coins, with the exception of the eagle. And now it's lower than them all. It's the best value. When you showed me, just a couple other quick points, when you showed that automated car facility, it makes me think of AI and all of the jobs that will be shed to technology as we move forward. My son, who just came to work at Miles Franklin for 3 years, he spent time working for one of the big three accounting firms. And right out of college, they paid him $85,000 a year to be a junior accountant. What the hell do you need to spend $85,000 a year for to analyze a balance sheet when AI can do it? And when you see this type of automation, it's kind of spooky. Where are all the people? And so, yeah, I think ultimately we have a lot of things to consider in terms of economics moving forward. just what AI means to the whole ecosystem and what will do to the job market, labor market, et cetera. It's like the Minneapolis airport is a good example. It's a huge airport, and they have in every gate, they have brand new restaurants in almost every gate or section of gates. And there's iPads at every table, and there's one waiter or food runner, basically, and one bartender, and that's it. And everything's done on iPads. When you check out of the airport, there's 50 or 60 gates that you can go out of. Every single one of them are credit card, except for one. When you come in, you put your credit card in, it registers it, the gate goes up. There's no one there. There's one booth with a human being in there. And I wonder what all of this deflationary technology means to our economy moving forward. Just a thought. And as far as India is concerned, yeah, the lowering of that import duty is huge, because you can see, just looking at the year-over-year difference between what they imported from the UAE in silver last year versus this year, and they have this treaty this year with UAE for a lower duty. And I don't have the numbers in front of me, but it was like they bought a few $1 million worth of silver from the UAE last year, and like $1.5 billion worth this year because of that treaty, because the tariff was lowered. And these are very bullish things, again, for the countries who are accumulating them. You would think that these are the kind of things that people in the US should be aware of. They're not listening to you or me or others like us talking about it. They don't know, and they have no understanding or interest of knowing. But these are very relevant and important things for sure. Yeah, but as far as that special, the pre-65 constitutional silver called junk silver, dimes quarters, minted prior to 65, 90% silver by weight. Amazing value, and maybe the best value in silver, period. The best value in anything we sell. I think it's a hell of a special, to be honest with you.
Well, I appreciate that. Appreciate you joining us each week, and hope you had a good vacation last week. We had a Jake visit in town, and I know he was sad that you weren't here, although he still went to a nice Korean
I
barbecue.
felt bad about that, Jake. I'm really sorry, man. My wife surprised me with a early birthday present to the Bahamas to unwind. Told me she'd break my leg if I worked while I was there, and but I wanted to see Jake. Jake is a stand-up dude, and I felt really bad about that. I was excited and pleased to get to see you yesterday. Um, uh, and talk about the things that we talked about. That was great, but I'm sorry, Jake. I wish you would have been there. I didn't know that we were heading out of town when you told me you were coming in, but next time I'll make sure I'm available. I promise you that.
Well, give him a bang as a send off before we go.
Bang, Jake. Bang, baby.
There you go. Two of them. And as we wrap up, just wanted to thank First Majestic Silver, who kindly sponsored this interview with Andy Schectman, and also had some news out this morning as they have the discovery of a new gold and silver mineralized system at their Santa Elena property. This is near the Ermitaño mine, and their largest discovery there since 2016. Quick look at some of the highlights. They had 10.13 grams per ton gold and 86 grams per ton silver over a true width of 4.42 meters, and also 54.93 grams per ton gold, 399 grams per ton silver over 1.82 meters. And the link to this full press release is in the description field below. And great news for First Majestic. And thanks for their involvement in the show and everything that we do here. So,
Chris, if I may, I mean, I know Keith Neumeyer. I think he's one of the best guys in the industry. He's a businessman. He's not a geologist. He's smart. He's honest. I own his stock. I own it because of him, because I trust in his acumen. And I just wanted to throw that plug out there for whatever it's worth. I think he's one of the best in the business, and he's a visionary. He sees things that other people in the mining industry, maybe it's because they're more geological in terms of their education and their vision in terms of business acumen. But I think it's a must-own stock for people who own silver mining companies. I say that personally. I personally would tell anyone it's a must-own. Not investment advice, but from what I know of him personally and professionally, he has my respect and my business. So just wanted to throw that out there. I think it's worth mentioning.
Well, I appreciate that, and certainly appreciate everything that Keith has done, and certainly being a voice in the silver industry at a time when that was needed,
Yes.
especially from.
He's got guts. He does. I like him.
Yeah. Well, again, you can find out more by going to firstmajesticsilver.com or click on the link in the description field below. And Andrew, we're going to wrap up here for today, but thanks as always for making some time and look forward to doing this again next week.
Love you, buddy. You take care. Sorry, my dog had to come sit on my lap as it's starting to thunder out here. She gets scared. So good time to wrap it up. I hope you and everyone else out there stays well. Again, Jake, I'm sorry, brother. Chris, I'll talk to you soon, and thanks for having me. Appreciate you.
All right. And thank you again to everyone at home watching. Hope you had fun today, and we will see you again tomorrow.
Bye-bye.